also wanted us to look at Jubilee. Peter, we can see the previous strong resistance on Jubilee is waiting there around R2.90. In other words, the share has to start to change R2.90 into a support before we can assume that it can reach for higher levels. The strong support that was previously found on the pullback is waiting there at R2.19. As long as the share trades above R2.19, we can assume that it can go to R2.90. However, there's a pattern on Jubilee that we have to take note of. Every time the share has pulled back, it bounced, pulled back, it bounced. And you can see that every time it's done that, it continued to make highs, new record highs. So technically, once R2.90 changes into a support, you can use Fibonacci levels to maybe determine, hey, where is the possible next high for Jubilee if the momentum to the top above R2.90 continues. And we can see there's levels of R3.35 and R4.07 that are possible targets where Jubilee can go to should R2.90 change into a support. Also take note here, Peter, there is a strong resistance and has been for the last 3 weeks on that level of R2.70. So that is clearly your first level of resistance that needs to change into a support to assume that R2.90 is a possibility. As long as R2.70 remains a resistance, I'll feel uncomfortable with the share. Why? Because it is overbought. I've already had a divergence where my two lines have crossed to lower levels. So don't know if you want to buy or sell at this stage, but use those levels to make your decision. And remember, a stochastic that is overbought tells you that the probability of the instrument to retrace to lower levels is higher. It's like used like an elastic band. You on the one side, me on the other. The more we move away from another, the more the probability is there that it's going to snap and retrace again to, being slap weak, whatever you call that in English. Tinus wanted us to look at Impala. Tinus, you're a very brave man because you said in your Twitter question that you want to consider a long. Now, yes, there is a cup and handle on the platinum price that can take it back to $1,425, but it has already given a massive rally to the top. So what is the full target? Okay, let's first look at the conservative target. Conservative target of Impala was at 216.83. Yes, the full target of Impala is obviously the full length of that cup projected upwards, which means Impala can possibly go to 312.86. The momentum to the top is in place. So to consider a long when the share is at its record highs is extremely risky. And also take note of that stochastic. Yes, it can break upwards, and yes, the stochastic can remain overbought and the price can continue to reach for higher levels, but you want to take a position based on probabilities. And the probability for an overbought stochastic is that the instrument is rather going to retrace than continue to reach for record highs. I would maybe, if you're brave enough, I know the platinum price can go to 1,400 and the rand can easily weaken. So to consider a long at these levels will be risky. But if you are a brave man, then you can do so. Protection level that I would use would be at around, and let me take that low of that candle, 204.08. That is a protection level that you can use, or it might just be a very brave short as well. Below 204.08, stop loss 230.65 for a possible pullback. I mean, this stochastic is heavily overbought. And also take note, I just want to mention it here. Have a look here on the pullback that Impala had. Every time it was overbought. It gave you some pullbacks of a couple of percentage. The same year, I mean, this was a massive one back in March last year. When COVID hit. But brave long if you do want to consider that, Tinus. Leslie wanted to look at Brait. I know a lot of investors have been frustrated. I mean, just a consolidation sideways. But Leslie, you are right. The share is oversold, which makes the probability of a bounce to higher levels possible. And there is a possible cup and handle formation on Brait as well. And I'm calling it a possible cup and handle formation. I wanted to make sure that that handle, there you go, that handle has got a strong neckline. The formation, the cup and handle formation will only be confirmed when that neckline, which is waiting at a 4 Rand 38, changes into a support. Then it will be confirmed. The strong support, obviously, and it looks like the share is continuing to make recent lows, which is seen as negative. It needs to stop making recent lows. It needs to start changing previous highs into a support before we can assume that this is a possible cup and handle. But the strong support that on Brait that has to remain in place, Leslie, is waiting there around 2 Rand 49. What you can even do, and that means it will be a negative formation, is maybe if you use a diagonal line, you can see that there is 3 touching points and that level has now changed into a resistance, and that weighted around 3 Rand 57. Below 3 Rand 57, we can maybe assume that Brait can go back to 2 Rand 35. The first resistance that needs to change into a support is my 40-week moving average, and that is the red line, and that is waiting at 3 Rand 32. Above 3 Rand 32, the first bells will ring that the long-term sentiment towards this share has changed to positive. And then that's critical resistance at 3 Rand 88, and then that neckline of that possible cup and handle waiting at 4 Rand 38. I would wait for Brait to stop making lows, maybe a turnaround candle, and you can see clear indecision. This candle here is a beautiful spinning candle, and that tells you indecision. It tells you the buyers and sellers are not sure what they want to do because the tail at the top, the tail at the bottom is the same in length. And that tells you, especially at the bottom of a retracement, tells you indecision. So wait for a turnaround candle. Wait for something that implies that the buyers are more powerful and that they are prepared to take their share price to a new recent highs. Hex wanted us to look at Glencore, a share that has been consolidating in a descending channel for a very long time. A beautiful cup and handle formation was confirmed. The conservative target was reached. And now the big question is, can it go back to the full target or even higher in that channel? But we can see beautifully, Hex, that every time Glencore has pulled back, it bounced. It found resistance there around a 59.13 again, retraced. So at the moment, as long as that support of 48 Rand and 6 cents remains, we can assume that the share can go back to 58.81 or even that previous resistance at 62.63. Also take note, it is overbought. It means the probability of the pullback is higher. I would not buy it here at these levels. I would rather maybe just hold on a little bit if you are greedy and you haven't taken profit, or if you've maybe bought previously at levels and you did not increase your exposure. I think you can maybe hold on a little bit higher. Let me give you the full target of Glencore. It's the full length of the cup, projected upwards from the neckline where the formation was confirmed, which means Glencore can possibly go back at least to 65.39. But keep these support levels, strong lines, 48.16, for 45.22, and that neckline at 43.73, at possible support levels that say, hey, once the share starts to consolidate below these levels, I will be nervous about Glencore. This long descending channel has beautifully taken the graph suddenly, very suddenly, to new record highs. Just shows you patience sometimes does remunerate one. Murray wanted us to look at DRD. Now, Murray, Pan Africa, DRD, Harmony, Anglo Gold, name them. The gold counters on our exchange, all of them have got head and shoulder formations on their weekly graph. Head and shoulders, double top, triple top formations are warning formations that tells you, implying that the top of the share might be in place. So technically, my left shoulder, my head, and my right shoulder, my goodbye keys on my 40-week moving average is a concern. It tells me there was not enough buyers to take this share through 1995, and it was a technical goodbye, is to say, warn investors there's not enough buyers and that we can see lower levels. The neckline on DRD is waiting at 1472. Yes, I've got a window there. It can easily just go and close that, and that window is waiting at 1344. But the conservative target of DRD is the length of the right shoulder in this case, projected downwards, which means DRD can go back to 927. I don't even want to put that length of the head in, because that takes DRD a lot lower. When will the negativity or the warning of this head and shoulder on DRD Murray be off the table? One, when my 40-week moving average changes, and I'm somehow going to use a horizontal line here, because you can see how very closely my left shoulder, which is waiting at 20 Rand and 12 cents, and my 40-week moving average, which is waiting at 19.95, how close they are to one another, which means the share has to start to consolidate above those levels before I can take a sigh of relief about that head and shoulder formation, and before the warning will be off the table and become obsolete. What is great is the fact that the share is oversold, which means the probability that it will bounce is there, but please keep an eye on that neckline waiting there at 1480. That level must remain a support, otherwise there will be trouble in DRD land. The other thing that I just want to mention as well, Murray, is that the gold price has to start to consolidate above $1,900. It's struggling to get through it. It's a critical level on the gold price. It has to get above it before you can feel comfortable about your DRD holdings. Don't forget to send through your request for next week's show. Have a fantastic week. Take care.